If you're new to investing, you probably asked yourself this question: should I invest in individual stocks or just buy index funds? One choice is simple and boring. The other sounds exciting, but can be risky. In this video, I'll break down index funds versus individual stocks, so you can confidently choose what's best for you as a beginner. Let's start with individual stocks. When you buy an individual stock, you're buying a piece of one specific company, like Apple, Tesla, or Amazon. If that company grows and becomes more valuable, your investment grows. But if the company struggles, your investment can drop quickly. Think of individual stocks like betting on one player in a game. If they perform well, you win big, but if they fail, you feel the full impact. Now let's talk about index funds. An index fund is a type of investment that owns hundreds or even thousands of companies at once. Instead of picking one winner, you're investing in the entire market. For example, when you buy an index fund that tracks the S&P 500, you're investing in 500 of the largest companies in the US all in one purchase. Think of index funds like owning the entire team, not just one player. Here's the key difference. Individual stocks: higher potential reward, higher risk, requires research and emotional control. Index funds: lower risk, steady long-term growth, very beginner-friendly. Most beginners lose money not because investing is bad, but because they take too much risk too early. For most beginners, index funds are the smarter starting point. Why? Built-in diversification, less stress, less time required, proven long-term results. Many successful investors start with index funds and only move to individual stocks once they gain experience. Here's a simple beginner approach. Start with index funds for long-term growth. Learn how markets behave over time. Gradually experiment with individual stocks. If you want, you don't need to choose one forever. You just need to start safely. Let's recap. Individual stocks equals higher risk, higher reward. Index funds equals diversified, beginner friendly. Most beginners should start with index funds. 3 steps you can take today. 1. Learn the basics before investing. 2. Start small. 3. Think long term. If this video helped you, hit the like button, subscribe for more investing basics for beginners, and comment below. Are you more interested in index funds or individual stocks, and why?